What is cracking, friends, and welcome to Earl's Yard, the channel where we talk about all things finance, crypto, Bitcoin, and wellness. In this first episode of the series Stock Market Investing, I'm going to be talking to you about some reasons as to why you should or you should not be investing in the stock market today. For all of you that know me out there and have been supporting me on the channel so far and the start of this new journey for me, I really do appreciate you. You know that I run a no BS strict 100% policy here on this channel. Every last inch of these videos that I make are based on personal experience and in-depth research that I've taken the time to do. With that being said, however, I am certainly not a financial advisor and this is not financial advice. Do your own due diligence. I'm just a dude on the internet who's managed to make a little bit of money from crypto and investing, and I feel like I can share a bit of that knowledge and my story with you here today. There will be a lot of value in today's video, guys, so make sure you do pay attention and stay focused until the very end to find out the answer to the golden question. It's if I ever actually get out of here. I think I'm actually lost. Should you, as an average individual, be investing in the stock market today with everything, and I mean everything, that is going on in the world today? My goodness, there is absolutely blood in the streets right now. Rona keeping everyone at a standstill, keeping everyone at home, lockdown in full effect. The economy has come to a halt. Unemployment rate is steadily rising. There is social unrest in various parts of the globe. And on top of that, the US and China trade wars seem to be reheating up again. What does this all mean for you as an everyday investor? It's really important to remember to remain calm when there's blood in the streets. You need to think rationally. You need to think strategically. Have a plan. Do not allow emotions to come into your decision making. Before I tell you what I think you should do, and before I do tell you what my personal strategy is, given the current climate, we need to talk about what is actually going on in a little bit of detail in the current climate, and we need to compare it to the last significant global financial crisis. In January 2020, Rona comes into full effect and economic shutdown begins. In 2020, the Dow Jones Industrial Average from February 12th all the way through to March 9th, just that short period of time, dropped a whopping 20%. This ultimately became the end of an 11-year bull market. For those of you that don't know, the Dow Jones Industrial Average is a stock index which represents the strength and the performance of 30 of the biggest US companies at any one time. On March 16th, 2020, the Dow Jones Industrial Average dropped a walloping 12.93%. This is the biggest drop ever recorded in a single day in US history. The second highest drop of the Dow Jones in a single day was all the way back in 1929, a whopping 12.8% in a single day. This infamous day has gone down in history as the day, marked down as the day that started the Great Depression in 1929. A financial depression can be defined by at least a 10% drop in that country's GDP and can last at least 3 or more years. GDP is a monetary measure of all of that one country's finished goods and services over a specific period of time. So we've got Rona that happens in January. Then we've got the biggest stock market crash on a single day. What happens next? Around 15% unemployment in the USA, with those numbers only set to increase. The US versus China trade wars, well, I thought they were over, but they seem to still be in full swing. If you are a potential investor in the stock market, or if you are an investor in the stock market, this will directly impact you. Trump is trying to increase costs for China to export goods to US-based companies. What does this mean for these companies? Well, it means higher overheads, higher costs. Who's going to have to pay the costs in the end? The companies may not always be able to bear them, so the cost goes on to the consumer. China is not going to simply back down and say, well, I'm just going to charge you the same amount. The business or the small business, the medium-sized business is going to have to pay. They may have to then, as I said, charge their customers. Some companies are not going to be able to do this. It will bankrupt many companies should it come to true fruition. A lot of us also seem to have forgotten the fact that, well, the Rona may come around for a second wave. I know that is a horrible reality for all of us, but it is definitely something that we all need to be prepared for and that we all need to consider for our financial health as well as our physical health. So we've looked at what's happening in today's current climate. Let's take a blast to the past and have a closer look at what happened in the 2008 financial crisis. If you found value in the video so far, people, I really would appreciate a massive thumbs up on the video. Please do like the video. If you're new here, what's up? I'm Earl. Please do subscribe to the channel, comment on the video, tell me about what you think about this video, and talk to me about maybe some other videos or topics that you would like me to cover. I would also really appreciate it that if you are finding that value, if you could share this video with all your friends and family, as it will simply better your financial education as well as theirs. Yo, it's Earl from 2008. The financial crisis has just come into full effect. The housing market bubble has popped. It was also acceptable to wear the cap forwards back then. I'm honestly joking. It's 50-50 split. Yeah. In October of 2008, we saw a 10% decrease in stock indices. When we now fast forward to the year 2009 in October, we saw an unemployment rate of 10.1%. Think about this for a moment. Housing bubble bursts. Stock market drops 10%. Rona comes along for the party. Stock markets in a single day drop 12.93%. Remember, people, the biggest ever drop in a single day. 1 year from 2008, again, sorry to mention again, but it's important that you do remember the number. We have 10% unemployment 1 year later, 2009. As I stand here making this video here for you today, we have 15% unemployment in the US and rising. That's an entire 5% more than the 2008 bubble crash. Since we had the crash from February to March in 2020 this year, we have almost had a complete market recovery. We have literally dropped off the cliff and done almost a complete 180. In my opinion, it is not real growth. A lot of it is just built on speculation that these companies are going to continue to do well, but that is simply not the case. The statistics are not there. Q2 earnings reports are not even on the table yet. A lot of these companies are simply going to be going bankrupt. They already are, and people just are not aware of it. This, in my opinion, is just not sustainable growth. It should take perhaps years for the market to recover from the drop it had, not weeks or months. Before we rush to any conclusions, it's really important that I let you know, just because that happened in the past in 2008 does not mean that we can purely go off what happened in 2008 and draw a reasonable conclusion in 2020. A lot of things have changed since then. The first main difference that I'd like to talk about is kind of obvious, but in 2008, we had the financial housing bubble burst, which led to a decrease in the performance of GDP in the US. In 2020, we've got Rona. They are different causes. The two other main changes are as follows. The first one is AI bot trading, artificial intelligence bot trading. What is this? Well, it simply is the ability for people to set up artificial intelligence bots, which are simply a program that could be set up on a trading computer to execute trades in the stock market automatically without that person or human having to be there. That ultimately saves that human or person time. But what does it mean? It basically means that, well, a lot of these trades or executed trades or positions, or when the bot automatically buys in or sells a position in the stock market, is based more on mathematics and technical analysis, looking at charts in depthly. They are not always necessarily ever going to be based on geopolitical matters or fundamental reasons why that business or that stock may increase or decrease in value. It doesn't take into consideration everything. That is a really important change to be aware of. The third change is, well, there are just more average investors in the market. It has become far easier, and there's far more information, far more apps, programs, and just features readily available on smartphones and computers. And there's just so much more marketing, and there's so much more general interest in cryptocurrency and buying into stocks and shares in general. So more of the average population, more of the average everyday man and woman are buying in to the market. For those of you who think that I'm trailing off, just hold on a moment. I haven't forgotten the reason why we made this video. We want to answer the question, should you invest in the stock market? I'm just about there. I'm just about to get to it. It's really important though that before we come to that decision on our own, that we have considered all the factors. Will we see another significant drop in the stock market within the next 6 months? Well, I couldn't tell you that I'm sure, but I'm not going to be like some of those other YouTubers that just say, well, it could happen or it could happen, but I'm not going to really just put my money where my mouth is and say. I'm going to tell you that within the next 6 months, I think, yes, there is logical reason to believe that there will be another significant stock market crash. There has just been too quick a recovery, and for what? These prices are just continuing to rise and rise and rise, but why? We haven't even got the facts, okay? And do remember that stock prices are built on the belief of what people believe the stock will be in the future, and not always necessarily what the true valuation of that company really is. Sometimes a company is valued relative to what their balance sheet suggests financially. Sometimes a stock is overvalued, and sometimes stocks are undervalued. I believe that majority of stocks are significantly overvalued relative to their balance sheets and to their GDP. That is why I believe another significant crash is coming within the next 6 months. So, what am I doing exactly, and what do I think you should do? As for myself, well, I'm accumulating cash. Cash is king right now, in my opinion. I'm accumulating cash, I'm working hard, and I'm saving as much cash as I can, and I'm waiting to buy in hard when the market crashes. I've got several stocks that I am keeping an eye on. I'm mainly a Bitcoin and cryptocurrency investor, and that stuff that I've held on to there, I'm holding for the long term. I do own a decent position in Tesla stock, but that's my retirement. So I'm not going to be selling. I'm going to be holding onto that Tesla stock long term and hoping to buy in should the price dip again. What you should do really depends on what your goal is, and I will be going into more detail about this in another video, but to keep it as short and concise as I possibly can, if you are a long-term investor, if you plan to take profits in no shorter than 5 years, then I would say if you don't hold a position in the stock market, it wouldn't necessarily be the worst thing to buy in now. A stock market crash is not necessarily coming just because I or anyone else thinks it is. So if you just want to hold on to some stocks, maybe you've got some cash there, perhaps it's not a bad time just to buy a few now and maybe see what happens within the next 6 months and buy a few later. Or you could play it a little riskier and just wait on your cash like me, and then when the crash does come, put your money in then. Because I've already got a little bit of a holding I'm happy with, I am personally happy to do that. However, before you do decide which company to invest in, do take some time and research that company. Get positive information, negative information about the company before investing. And if you truly believe from the bottom of your heart that that company is going to be successful and still around in 10 years' time, then I think that that company is a good investment. But what you don't want to do is invest in that company today. The stock price of that company's shares drops tomorrow, and then you get FOMO, fear of missing out, and you sell your position at a loss. Do not do that. Hold on to your position. The market will recover. That is exactly how most people lose money in the stock market. Don't do it. Don't do it. Don't do it. Seriously, just don't do it. Just to make it crystal clear, that would be the long-term investment strategy. If you are a long-term investor or you think you might be a long-term investor, that is the approach that I would take. And in my personal opinion, it's a much safer and easier approach, especially if you are new to the stock market. However, if you are looking for short-term gains, I'm not gonna lie to you, it's risky business. Now, if you're some kind of expert whiz financial analyst, you're in like the 2-3% of people that actually can make profit in the short term, and it's definitely possible, but it's a skill which I think needs to be learned over a long time, and it's not something that, well, a beginner can just come in and do. You might come in and fluke a stock, or you might come in and fluke a cryptocurrency, but in general, it's really more of a gamble, and you're much more likely to lose money this way. So if you're in it for the short term, I would really say to you, look, if you're an expert in your field and you've been investing for a while, then it could be an opportunity to invest in the short term. But in my personal opinion, if you are looking for short-term gains, especially now when these prices are almost at all-time highs for a lot of these companies, then I would say to you that I wouldn't be investing in the stock market now for the short term. To be clear, the short term, in my opinion, could be anything up to 1 year. If you've watched the video all the way to the end, I really appreciate you paying attention. I do hope that you think I'm a cool guy and you did subscribe to the channel and you did like the video. If you did find some value around here, then make sure that you do check out some of my other videos. I will be popping them up in the end screen here shortly. And just to summarize on the points as well, look, it's a tough time to predict, but what I really think you should be doing, or most of you should be doing out there, especially if you're new, is, as I said before, save your money, work hard, and earn some passive interest on your cash. Crypto.com gives you 12% interest per annum on your stable coin. So you can essentially invest US dollars on Crypto.com and get 12% interest per annum paid out each week with a minimum stake of just 3 months. I mean, that is awesome. Your bank is going to be lucky to give you 0.5% interest. Crypto.com will give you 12% interest. I'll include a link for the Crypto.com app where you can access the app and get access to the MCO Ruby Red Card or above, and you'll be able to access these awesome interest features. So you invest on the app, you put your US dollars on the app, earn your 12% interest per annum, and then when the time comes to strike and invest that money, you can invest it in the right places. I hope you enjoyed the video today, and peace out till next time. Oh man, I literally had my fly undone for that entire video. Ah man.